Hello, and welcome to another episode of the Investor Financing Podcast. And I am your host, Beau Eckstein. On today's show, we're going to talk about how to finance assisted living facilities. If you're an established assisted living facility operator, developer, um, probably the kind of major product or flagship product is the HUD 232 program. But PACE is really gaining market share. PACE Equity is gaining market share with these assisted living facilities. And I think comparing a credit union or bank with PACE financing, it's really kind of the ultimate. You're getting extremely high leverage, relatively low cost of capital without the same scrutinization of having to go the HUD 232 route.
Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio.
Hello, and welcome to another episode of the Investor Financing Podcast, and I am your host, Beau Eckstein. On today's show, we're going to talk about how to finance assisted living facilities. Let's get started. So what are your options when financing an assisted living facility? We're going to talk ground up right now, and then we'll talk stabilized after that. But I get a lot of requests for construction and ground up projects. So we're going to speak to that first because that's a little bit more complex than a stabilized asset that's already got tenants and occupants in the property. So let's get started here. So what are your options? If you're an established assisted living facility operator, developer, probably the kind of major product or flagship product is the HUD 232 program, which is a 40-year term, and it'll finance 75 to 85% of costs. The challenging part with the HUD program is they do scrutinize these projects pretty intensely, and they take months and months to originate and close. So could be anywhere from 6-7 months to a year to get these things through and approved. Financing is 40 years though, fixed for 40 years. I mean, it's the best financing. Rates are probably in the low threes. This is for board and care, memory care, skilled nursing, and assisted living facilities. The other funding sources is SBA 7A, SBA 504. Private debt funds are doing a lot of construction on these right now. Banks, local banks, regional and national banks, and credit unions are doing assisted living facility projects right now. Those are the kind of major lending sources for these projects. There's REITs out there that will fund. A lot of these REITs want to find developers to build them out, get them stabilized, and then these REITs come and buy them. So they also offer debt financing for these type of developers to kind of fill their pipeline with stabilized properties to buy.
You're listening to the Investor Financing Podcast. We'll be right back after this break.
And now a word from our sponsors. Want to save money on your taxes? Cost segregation is a strategic tax planning concept that saves money by deferring federal and state taxes through accelerated depreciation. Get a free benefit analysis today. Please visit costseghub.com for more information on cost segregation and all of our cost recovery services that can put more cash flow in your pocket.
Anyway, during COVID, it's been a little bit more challenging, obviously, because it's a scrutinized industry because it's older people, in one place. COVID, there's a lot of people being scared, but with 10,000 baby boomers turning 65 every day, this is here to stay. And so there is a major boom of developers building these facilities right now. And I believe, for the next 10, 15 years, there's a need for, there's a shortage of of inventory for sure, just like there is in the single family space. There's a shortage of housing nationally, and to get these funded, there's a lot of options, and it's really going to come down to the sponsor's background. How many facilities have they purchased and developed and operated? Just the same things you would vet out with any kind of real estate project, but we want to see on these particular, you want to see the operator's experience, where the property is. There's usually a feasibility study that a third-party feasibility study that compares the market. It shows you the competition, the absorption rates of these facilities. So that's important as you're packaging these together to find the right home. And I think recently what I've found is that we're having more success with our bank and local credit union partners, depending on the sub-market of the property. But and debt funds are very active in this space. So I would say that the funding is definitely available. It's a little bit more challenging now since COVID, like most things are. But depending on if it's your first project or maybe your third project, and if you've never used SBA might be a great option, because you can do a 504 structure or a 7A depending on the deal itself. So we kind of analyze which makes the most sense based on the project, but you can get loans up to in conjunction with a conventional loan up to $15 or $20 million going SBA, which is pretty significant. Obviously HUD, you can do very big projects. You can do, $50, $75 million projects. Same things with banks. Banks can usually do $50, $60 million projects. Depends where the project is. You got people doing smaller projects that are maybe 3 or 4 million. You got larger projects, and then in between, there's financing. And obviously, what I want to kind of narrow in on the rest of this episode is that PACE financing doesn't really work in conjunction with HUD. But HUD is also very high leverage, so you probably don't need the PACE piece in there. But PACE works really good with the debt funds, the credit unions, and the banks, and it can work in conjunction with SBA. So what we do with PACE is PACE funds a portion of the eligible green items of the build, and it's approved in 25 states right now. So in half of the states, it's eligible: California, Florida. I've done other episodes on what states are eligible for PACE, but PACE is really, really gaining market share. PACE Equity is gaining market share with these assisted living facilities. And I think pairing a credit union or bank with PACE financing, it's really, really kind of the ultimate. You're getting extremely high leverage, relatively low cost of capital, without the same scrutinization of having to go the HUD 232 route. So hope you enjoyed this episode on assisted living facility financing. If you have any questions, feel free to reach out, send me an email. Please like, subscribe, and share this with your colleagues. I look forward to future episodes, and have a great day.
Thanks for listening to the Investor Financing Podcast. For show notes and useful resources, please visit investorfinancingpodcast.com. For questions or comments, email info@investorfinancingpodcast.com. If you enjoy our show, please share it with your network. Until next time.